Welcome to the Smart Property Investment Show with your host, Phil Tarrant. Welcome to the show. Phil Tarrant here. Appreciate you tuning in. Guest today, it's going to be an interesting one. Vivian Kelly has joined us back on deck. Vivian is our editor across our mortgages and real estate products here at Sterling Publishing. How you going, Viv?
I'm good, thanks, Phil. Glad to be back.
It's good to see you again. Also have Joe Vadillo in. Joe is a property investor, which we like, and she's coming in to tell us all about her buying experience over the years. So, Joe, thanks for coming along.
Yeah, more than welcome. Thank you.
So, you're a property investor.
I am.
What does that mean to you?
What it means to me as a property investor, it's given me a lot of freedom in life. I kick-started my portfolio in my late 20s, and it's grown from there. I hold 6 properties at the moment. I'm actually renting where I live. Because
Sorry, you said you hold 6 properties.
I have 6 properties.
Sorry to interrupt. It's a really interesting term. So you hold 6 properties. A lot of people say, I own 6 properties or I have 6 properties. I hold 6 properties. To me, it really gives me the concept that you are actually an investor. You see it. It's not like an emotional type of thing. It's
all numbers. Everything in my life's for sale except for my husband and my kids. Yeah. If anyone door knocked and said, we'll give you 20% over market, there's no emotion at all. It is all about numbers. Yeah. It comes down to numbers purely. And that's the reason I'm actually, my principal place of residence, earlier this year, I decided I wanted a bigger and nicer one. So I rented in the same suburb, and now that's been rented out. In fact, I went over on holidays over Christmas and actually put our own family home on Airbnb. So it is numbers.
Cool.
It's purely
sorry to interrupt you there, but I just thought it was a really interesting term of phrase. I liked it. So your story, 6 properties?
Yes, that's right.
Where are they?
I've got 2 in Sydney and I've got 4 in the Brisbane market.
Okay. So in Sydney, whereabouts are they?
Inner West, Helston Park.
Okay.
And our Lower North Shore.
And were they the first properties you purchased?
The Inner West one was.
Okay.
And I did buy that, as I mentioned, in my late 20s. I wish it was early 20s. I wish it was early 20s. I wish I had started earlier. But I did buy that. At the time, I had a boyfriend who has since become a husband. But I did do that on my own, and I was the one with the pre-approval, and we'd go around looking at properties, and he was very diligent with me. But every single time we walked into a property, the agent would always look at him and ask for his name, and that really grated on me. Mm-hmm. So I became a little bit of a, girls can do it for themselves, and I'm really grateful that I got that on my own. And we've since acquired, the properties ourselves, as a couple. Yeah. We have sold a few along the way because we've renovated it, and the numbers were right and the time in the market was right.
So we'll get back to that as part of your strategy. So there's 2 in Sydney currently and 4 up in the Brisbane.
In Brisbane,
market.
that's
Whereabouts
right.
in Brisbane are you?
I've got 2 in Logan.
Yep.
And then I've got 2 in Moreton Bay, so
Okay.
north of Brisbane City.
And what's performing better, the Logan ones or the Moreton Bay ones?
Moreton Bay is performing better. I bought that in my self-managed super fund.
Okay.
Logan's a different strategy, so let me know when you want to talk strategy.
Well,
I can give you the rundown.
Well, I think before we get to strategy, let's talk about why, I guess. A lot of people, and Viv, you chat to people every day about this, about why they invest in property. And I invest in property because a couple of things. I like the game. I like to know
absolutely.
that I can be good at it, and that's quite important to me. But I also want to create some wealth. And a lot of people you speak to, Viv, it ranges from lifelong passions to be a property investor through to...
It ranges from family pressures to wealth creation to just that Australian ingrained notion that you have to have property.
Yes, yeah.
To sort of the fear that the other asset classes are a bit volatile. There's lots of different motivations out there, but I think wealth creation is probably the largest common thread.
That's definitely my motivating force. Certainly is. And it's given me a lot of freedom, to make a lot of changes in my life and enabled me to travel. It's enabled me to invest in other businesses as well. So it really has been a huge catalyst for my decisions in life.
So you talk about being an enabler. How is it an enabler? Is it a financial enabler, or is it a time enabler, or is it something else enabler?
It's a bit of both.
Okay.
It's also, I've had a complete career change as a result of my property investing. I used to speak to a lot of friends about property investing, and a lot of them were kind of a bit bored by it, possibly because I didn't stop talking about it. And as a result, people said you really should get into actually working in real estate. And at that time, I was actually working in advertising, in media industry, and I had no intention of ever going into it as a career, and I couldn't see myself selling real estate. But as a result, I actually did go and get my full license, and I became a buyer's agent because I was already doing pro bono work for family and friends anyway. And for fun, for kicks at night, I'd jump on my laptop and just look at property. I mean, it really is, it's a passion, it's a hobby, and I love how tangible it is. And even when things go wrong, if you've got like a bit of an exit strategy, or you can buy and hold, or whatever it is. I just feel it's very malleable, and it works in, it's really helped our futures and set ourselves up quite nice financially.
And Jo, you mentioned that it is all about the numbers. So why is it then that you rent where you live and that you don't own where you live?
As a buyer's agent, I look at a lot of properties, a lot of properties, and I don't really want to buy an old one or one that's, I've done plenty of renovations. I don't want to live through another renovation personally. I'm happy to do it if I'm not living there. So the reason I rented was purely because I want a bigger house. The plan is with our current home is to knock it down and rebuild. I just don't have the time to do that. It's a long tail process, the DAs and the fire restrictions and everything where we are. And so I thought I want a bigger house, I want more space, and I want a really nice pool. And tick, 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 one landed on my lap technically, and we moved about 1 kilometre up the road.
So sticking with goals, so creating wealth.
Yes.
Okay, that's good. Why do you want to create wealth? Like, what is the driving force behind that dream in terms of having a better financial future? But your goals, how do they associate themselves with the bigger picture stuff? So there's a bit of a roundabout way to say, just making money is one thing, but
sure.
Is the goal is to own 50 properties? Is it own 100 properties? I want to own that many properties because therefore I can do this, that and the other and have this income or cash flow, which allows me to do X, Y, Z. How does that work with you?
Okay. So the ones I bought in Logan, you asked me about the Logan properties and how they're performing. So I'm not one of those people who've got a picture of me in my private jet just yet. I don't actually even have the goal to have the private jet just yet either. But the ones I bought in Logan, I bought on large blocks of land, and I happened to buy it within pretty much days of a Brisbane big downpour where it flooded. The market dropped, the GFC happened. But I did buy the 2 properties I have in that area are on large blocks of land. So I can actually subdivide and then I know I'm able to put 2 dual key properties on the back of it. And so I'm trying to work out the numbers myself. Do I buy and hold? Do I keep it? Do I sell the old one? Do I keep one of the new ones? And then that will enable me to then do the knockdown rebuild in Sydney. So the numbers do stack up for us to do it in that particular structure. So to answer your question about goals, I don't sit down and say, look, I want to have 50 properties by the time I'm of a certain age. It is about cash flow as well as, I would like to be sort of cash flow rich as well as asset rich. But it is about freedom, and it is about, giving my children, choices in life. We just got back from the Philippines. We were there for 3 weeks. My 7-year-old spent his birthday, swimming with whale sharks.
That's cool.
It is very cool, and it allows me to do that. So that's my aspirations, and it's about life choices. So when I started up my business, my goal for that, when I became a buyer's agent, was within a year I'd like my husband to work with me full time, and we achieved that.
Good.
So the 2 of us are now self-employed. We employ other people, and we're very passionate about property, and we really thrive on inspiring other people also to get on board. So it really is something that it's not just waking up and making money every day. It's also very rewarding. It's rewarding to see people reach their goals too.
It is good. And longer term, is this a portfolio which will hopefully provide for you guys comfortably in retirement, so you can go and do all these great wonderful things? But is it a generational play for you as well? Is your goal to leave your kids a nice big fat property portfolio?
Look, I'd like to do that.
Yeah.
Look, I mean, it'd be a nice thing to have, and I'd also like to do a lot of other. This is a word I struggle on. Philanthropic. I did it. I would like to be able to give back as well, and that's why. I mean, I really do. I do a lot of speaking gigs as well. To try and inspire women, especially. A lot of women have got a funny attitude when it comes to money, or they've got a blockage. And I do think a lot of them may rely on the fact they'll marry well, or that the husband will look after them. And I think it's almost like it's a dirty word, and you don't have to create wealth just so that you have a fantastic collection of shoes. You can look after your parents as they age. You can give your kids the best education. You can go on fantastic holidays. You can continue investing in property. For me, I like being able to try and give that message to people that investing is not just about your own person. Like, it's a journey. I feel like it's a real journey, and it's really rewarding.
Well, as the word you used initially was, it's an enabler, and I think it enables people to have choice. And that's what attracts me to property, what attracts a lot of people to property. Is this something you're trying to instill in your kids as well? Do you talk to them about money and stuff? Like, do they get it, what you do?
They do, and they have come to quite a few open homes with me. I think they get it. They're young, they've one's just turned 9, one just turned 7, I've got a 2.5-year-old. So, but they do understand that we're self-employed, and we try and say to them, look, if we work for somebody else, we wouldn't even be home at this hour. So it does allow us a lot of freedoms, and I think I try and educate them on what that might mean for them. I'm not setting them up in such a way that they don't have to go out and make it work for themselves, but I would like to see them start investing possibly on, the younger side of 25. I really wish, and I meant that earlier, I wish I had started younger.
Jo, you've just listed off some positives of being self-employed there, like being there for your kids and being able to go on holidays when and if you want. Are there any negatives, though, being self-employed and trying to build a property portfolio?
Yeah, look, that there certainly has been for us. And one of those is the 2 properties that we hold in Sydney have got an enormous amount of equity sitting in them now. Obviously, lenders don't shine a light on self-employed people in terms of lending them money. So that, given that both of us are actually self-employed, and you've got to have a good traction of high income earning for a period of time to be able to get your hands on the money and show that, hey, I've got 6 properties and I've got 3 dependents and I run 2 companies and we're both self-employed, can you please lend us some more money? And that has been... It's delayed things a little bit for us. I think if I was to replay my life in the last 5 years, I might have just set myself up with some pre-approvals whilst my husband was still in a PAYG scenario. Now, fast forward 5 years, we've got a track record now, our taxes have been done. So now I'm hoping that I'm on the other side of that and I can show the bank that, yes, I can actually, pay off what it is I want to borrow.
So what sort of lenders, so across your 6 properties right now, do you have banks or are they non-banks as the financiers of them?
They're all banks.
They're all major banks, are they?
I think I've got I've got the superannuation property in. I've got 2 in the self-managed super fund. It's a kooky one in Victoria.
Yeah.
But it was one of those, scenarios whereby it was, there was a very small handful of lenders that would, lend it at the time.
So are satisfied to lend to self-employed? Because we write a lot about this sort of stuff, and we're very pro-self-employed, and self-employed people often struggle with securing finance. They might have very good businesses, but their administration in terms of making sure their tax returns are good and stuff.
That's got a bit of a smile on your face there, Phil. Are you referring to yourself?
Banks happy to lend me money, but I've been very open about some of the challenges in building my portfolio has been that I don't have the time to get all the stuff together to give it to my broker.
Yes.
So he can go and do it. And that's one of my biggest challenges in growing my portfolio is that I just, I ain't got time to find rental slips and bank statements and all this sort of stuff.
I hear you.
There's no reason why the bank won't lend us money. It's just the admin part of it is where I don't prioritise. And, I'm not too bothered about it, to be fair. But when it becomes an emergency, I sort it out. But if it's not an emergency, it gets sort of put in a pile. So,
that's why I'm sorting out my income tax returns for 2015 at the moment. So, and look, with what you're saying is exactly, it took me 6 months to get us self-managed super funds set up just because they'd asked for paperwork and 2 weeks later I'd react to it. So, because you're busy.
That's the boring part of property investing.
It's not fun. It's one of those,
But it's absolutely essential.
So is there any advice that you would have to other self-employed people in terms of making this process easier or speeding up the boring bits?
I think before they leave a PAYG or they've got a partner and the idea is that the partner comes on board, I would certainly look at getting some pre-approvals in place or having a plan. So if you're thinking, like in a year's time I might do this, my advice to them would be, look, review what the situation is now and see if you can have access to that money or get a line of credit sorted out. With that, with being self-employed, the reason I was able to also acquire another company was because I did have equity. So as I said, fast forward the 5 years, that enabled me to actually buy and invest into Property Women, which is another company I'm very, very passionate about, which educates women on how to invest. So, whilst it's closed a couple of doors, or it hasn't closed doors, it's just slowed down the process. And I've had to give away some fantastic property deals that have come to me, but I've been able to give them to clients.
It's the nature of the beast. It's just the way it works. It's sticking on the finance thing. It's always good to shop around. I highly recommend using a mortgage broker. They're the people that know how to navigate the lending landscape, which changes on a daily basis. But there's some excellent alternative lenders, if you want to call them that. Is that the right term for them? Alternative lenders or specialist lenders? Specialist lenders is probably a better term.
Yeah.
Guys like Liberty and Pepper. And Bluestone, they're all quality businesses, and they're a lot more open to lending. Lending to self-employed people is in their DNA. So just don't restrict yourself by thinking that you need to go to a bank to secure mortgage financing.
Sure.
Speak to your broker because they'll put you in the right way. And there's generally, if there's a problem, they'll fix it. That's what I found. Anyway, so 6 properties now. You'd like to invest more? If the banks were happy to give you some cash,
Look, to be honest, I think the next step for us will be to develop. I would like to go down that path because as a buyer's agent, I like to live and breathe what we preach. So if I say to a client, why don't you set up your self-managed super fund? I've been there, I've done that now. I've renovated numerous properties now. So I'm happy to walk into a property and go, this is a money pit, don't touch it. Alternatively, all you need here is just paint and carpet and, you can add your value. So I like to live and breathe, but I just see property developing being where I go down that path now, and that's what I would like to do with the existing properties we hold in Logan.
So the work that you do with women in finance and buying property, I think that's really cool. Let's talk sort of Mars and Venus type things, right?
Okay.
Most, I got a lot of mates and stuff, and obviously females, and I talk property with both sexes quite a lot, and it's funny the different way they view it, depending on some of it's based on gender, but some of it's based on your socioeconomic background, some of it's based on all this sort of stuff. The work that you do with women in terms of property or the perceptions towards property, is there anything that really stands out for you as we just don't think that way, and that's very different to the way men might think about property?
I think there's a lot
of dangerous turf, this.
Yeah, no. Look,
but I think it's really interesting. Yeah.
I think with women, there's a lot of over-analysis. And a lot of, they need to, I find that a lot of them have overanalyzed the numbers, and some of them have come to me and said, look, I want to invest 20 years ago, and they didn't, which breaks my heart to hear for them.
So a bit of analysis paralysis.
Absolutely.
Thinking about it too much.
I was trying to work out what that phrase was.
Yeah, so look, I think it's so busy, looking and making that perfect deal that they don't even buy one. If they had a jump 5 years ago in Sydney, they'd be doing really quite well, pretty much anywhere if they had a bought in Sydney. I do also find with women, and through property women, I've met a number of them that they're coming out of a marriage. They might be in their sort of mid to late 40s or possibly a little older, and they say, my husband was never interested because he came from a mindset where you must pay off the family home first. So, a lot of the times I find they've been held back by a partner's attitude. So women, and I guess with property women, women learn differently, and some of them are intimidated in an environment where you're asking financial questions and to put their hand up around when there's a bunch of men around. So I think that's also another stream of interest that we do have in the company as well, that girls just want to ask questions that may seem a little dumb, and they don't want to be seen as dumb, even though a lot of the guys might be nodding going, yes, I wanted to know the answer to that.
Interesting how it all works. So what would be your top tips, Sam? Because we have a lot of female listeners to the show, which is cool. What would you say if they're sitting there thinking, I need to keep looking, I'm not ready to make a decision? What's your advice to those girls?
I'd like to say make a decision.
Yeah.
Really segment your geographic range. Trust your instincts. A lot of people don't, and if you've done a lot of research and it all stacks up, I would say, look, just trust on that and do plenty of due diligence. But my advice is to actually act on it and pick up the phone. So don't just sit behind a computer screen. Actually start talking to some of the agents as well, and really try to, physically get on the ground if you have to, or if you have to outsource, look at using a buyer's agent, because maybe that's the person that cracks the whip that actually helps them in the long run.
Interesting.
Well, there's a lot of people out there as well, Joe, that just don't like to talk about money, and we find that with a lot of the women that we do end up speaking to, they get a bit sort of paranoid or worried about putting themselves out there as a successful woman in property or as someone who has built up wealth, and they're secretly proud of it, but they don't want to admit, I've built up $3 million worth of wealth, whereas traditionally we find that the men are much more open and willing to talk about it. So why do you think that is? Why are the female property investors, when they do take the leap and do get started, that they're not sort of out there, getting the accolades and attention that they deserve?
Good question. I don't know what it is. I don't know why women, maybe it's seen as narcissistic, or I'm not quite sure why men are more proud. It's and I am meeting more and more women who are really successful, but you're absolutely correct. I mean, they don't sort of say, hey, look, I did make $3 million. My property is worth this. It's just a different language. And some of those women I'm asking, come and speak, please be on a webinar for us, because we need more role models. And it wasn't that long ago, there was a real estate event in Sydney where there was 9 speakers and not one of them was a female. And it does impact, because we all look to role models that we can sort of think, oh, well, she can do it, I can do it too. Look, I don't know why women don't. And I must admit, I think I personally keep a lot of my cards close to my chest because sometimes people will throw negative comments out there and it starts to erode your confidence. So if you're at a barbecue and you're taking advice off someone's brother-in-law who says, oh, I wouldn't invest there, take advice off someone who's successful. Don't take advice off some random who's got an opinion on an area that he might have read about once in a paper 4 years ago, which is now irrelevant.
Yeah.
So, look, I think I often suggest, talk to people who you want to model and be like. So,
do you find that, Phil? Do people give you pushback about your property portfolio and the decisions you're making when you're at barbecues and chatting away about it?
Not really. It's quite the irony of it is that I talk about it really openly, and that's always been, I guess, the backbone for smart property investment, is that we created the product because, I'm a journo, Viz a journo, and we went, always get these stories, and the stories are always too glamorous and perfect, and you just look at them and just think, that's not true, they're hiding stuff. So the premise of smart property investment was, let's talk about property in its real sense. You don't get rich overnight by investing in property, and if you do, you're being so risky that at some point in time you're going to fall on your face. So, we wanted to talk about the realistic aspects of investing in property. It's hard. It's a hard trudge. It takes time. You don't flip. All these type of things. And, it annoyed me that there was all these glamour stories. So hence the reason why we started building our portfolio and talking about it so openly. In terms of feedback, most people get inspired when I talk about it because, I don't have any super duper secret strategy. I don't have any tricks or, what we do is very, very simple. We find under market value properties in areas which are affordable, that have prospects for growth and either neutrally geared or thereabouts. And we look to manufacture equity. It's not hard. It's not difficult. It's very simple what we do. The strategy is simple, and if we run out of properties or the market's change and we can't do it in one spot, we'll go somewhere else and try and achieve the same thing. So I think speak to people about property and speak to people who know what they're talking about. Don't speak to the naysayers.
Sounds like you're sort of hanging out with the right people then. What I find when I talk to some investors is that they do get a lot of negativity when they start investing and people say, oh, you're making the wrong decision, you shouldn't be doing that. A bit like what Joe said, oh, don't buy there, I read in the paper that XYZ is going to happen. So it sounds like maybe, Phil, you're associating with people who are helping you and the right sorts of people. So what I often say to investors when they say that is, look, maybe you're just sort of not hanging out with the right people.
If you're hanging out with the wrong people, you're probably one of those wrong people as well. I'm time poor, so I made a decision to use trusted advisors to help me build my portfolio. They can do buyers agents, accountants, mortgage brokers, etc. And they can do what I need to do to invest in property more effectively than I can ever do, and they can keep focused and dedicated to it. So look for help, associate with people who can inspire you, who can energise you, who can motivate you. And if you do those things and just keep your strategy simple and don't go in too hard or over your head, you're going to do well in property. It's not a crazy secret. I imagine you guys talk about this all the time, don't you, Joe? It's not a magic bullet investing in property. It's just about being smart.
And it is, and it's been a little tenacity. Keep at it. If you don't get at that auction, go to another one. It's keeping at it. And what I do,
enjoy the game. You need to enjoy
completely.
the game. It's good fun.
Yeah, it is indeed.
And so next 5 years, what's the aim? What are you doing property wise? Any investment goals?
I would really want to dip my toe, actually put half a leg, I think, into the developing pool. I really want to go down that path. I want to sort of just explore whether it's just doing savvy subdivisions. This is probably in the Queensland market, not in New South Wales. And exploring that, and possibly the work I'm doing is less renovation, elbow grease stuff, but it is more about, keeping that land. Do we build here? Do we do that? So it is more paperwork.
It's a common goal for a lot of investors. So, we've got a reasonably large portfolio, and they're just cookie cutter properties. There's nothing exciting about them. There's some upsides in them and stuff, but you get to a point and you go, I can just keep building a portfolio with these type of assets that sit within it, or I can start being a little bit more creative. And a lot of people get attracted towards development. I look at that opportunity and I think, I don't have the time to even contemplate and think about doing it, and I'm quite happy and nice and safe in doing what we're doing right now. But for you to go down that path, which I think is great, to explore that and sort of advance the way you invest, what do you think you need to do personally to prepare yourself to make sure that is as successful as possible? Because a lot of people that start developing end up in a lot of trouble.
I'm going to start small. I'm not going to go in and do a 6 townhouse development because I already hold the land that I want to work on. I've got a house that's sitting there. It's neutrally geared. I think that'll be where I start. I'll do that subdivision. I'll build the property, making sure that the cash flow is still there. It's still working for us. And I think I'll just start small and build on it. You know, I'm not envisaging that I'm going to be doing, you know, skyscrapers at this point. Because I want to do small stuff. I want to be involved. I mean, it is the game and I do love it, you know, and I do enjoy it. So I do want to be actively involved, and just before I launch into anything, just ensuring that I've done all my due diligence as best as I can.
It's all about research. So just going back to your property really quickly, because we've got to start winding up. 6 properties. What's the total value of the portfolio? You said you keep your cards close to the chest. So if you don't want to answer it, so you say I'm not telling you, but...
I actually started to tally this up the other day. Look, it's over 4 million. I'm not sure of the exact figure.
Yeah.
So
and you've got a lot of fat in your Sydney property. So
I
imagine
do.
what's your LVR across your portfolio, do you think?
Oh, look, across all of it, because Queensland ones did flatline for us, I'd say you're looking at about 65.
Okay. So
Yeah.
it's reasonably conservative,
Yeah,
depending
yeah.
on how you view the world. And it's a neutrally geared portfolio?
Completely, especially with interest rate changes.
Does it put any money in your back pocket at all, or is it
It's
just...
minimal. But, you know, there's always a hot water system that breaks, or I never have any vacancy issues in any of our properties. It's very rarely has that happened, but you know, there's things that break, there's things that happen. So by the end of the year, when it all peters out, look, I'm not buying a car with the leftovers.
Okay. But you're sleeping well at night.
I'm sleeping well at night, and I'm going to
the
the Philippines for 3 weeks with my kids during the school holidays. I like that.
That's good. And all the properties are managed by managing agents?
Completely. I absolutely endorse property management. You know, I know a lot of people who want to do it themselves, but like you, Phil, I'm really time poor. I don't do it as well as them. I don't want to go to tribunals. I don't want to chase anyone for money. And I've had some kooky requests from our tenants, but it doesn't come to me direct.
So you're 6 properties in, but you've bought more properties because you've sold and stuff, and we'll get you back in at some point and we'll chat about that stuff. But if you can go back to your late 20s, I think when you said you started buying, if you can go back to then and could give yourself one gem of information that you wish you knew then that you know now, what would it be?
Oh, probably start earlier. You know, like I think I mentioned that. I think I was probably one of those overanalyzers. I went and looked at many opens before I jumped. And in retrospectively, I probably jumped at the very peak of the market. I think it was like 2003. So I think that was the highest. But the property's more than doubled now. You know, with 0 vacancy issues. So
sounds good.
Yeah.
Anything to finish up with?
Look, the only thing I wanted to say was we've gotten a lot of feedback on the show so far about how there has been a little bit of a lack of women, and a lot of that is coming from women. So I'd like to issue the female listeners a challenge that if they're dissatisfied with the female representation on the show, send me an email, editor@smartpropertyinvestment.com.au, and put yourself up for the show, because we'd love to have you on. Joe can tell you it's not scary, it's a lot of fun.
It is fun.
And come in and just have a chat, and then there'll be more females on the Smart Property Investment Show.
More women on the show. That's what we need. I'm sick of just speaking to blokes all the time. You know. Okay, great. Well, Joe, really appreciate your time coming in. It's been a real pleasure, and
Absolutely.
stay in touch, and we'll get you back again.
Sounds good to me.
Stuff.
Thank you very much.
Viv,
Thanks, Phil.
again. Good work. Thanks for tuning in, everyone. We'll see you again next week. Remember to check us out at smartpropertyinvestment.com.au. We're also on Facebook, Twitter, and all those other things. You can follow me if you like on Twitter at Philip Tarrant, or as Viv said, you can email us at editor@smartpropertyinvestment.com.au. We'll see you again next week. Thank you. Bye.